Yes, hopefully everybody had some internet problems there. There. So I think that we can start. So we'll start by looking at just the news here on investing.com. And as you can see, we have rallied quite a bit for the trading session today. And that was also expected after the massive fall. So most of the things that basically fell yesterday, they have been rallying today. For example, the futures, they are up. Also, the Nasdaq was up roughly 2%. Gold is up significantly. It's up at 1700 at this point. Oil is also back up. And you can see also the US yields here, they are down. So basically the market has reversed today. And the question is whether or not that will hold or if it's just one day and then it will continue to drop. So there's not a lot of news in the economic calendar. We can see you can look at the GDP numbers for Europe, for European Union, and they fell, well, they didn't fall as far as they expected. It expected a fall of 5%, but it fell 4.9%. I don't really know why they expect that to be really good and mark it as green. That is absolutely horrible. So yes, Europe is in the fourth quarter last year was doing really badly, as was everybody else in the world. But then you have this could affect energy markets, for example, oil, WTI, and natural gas, whether or not expected demand for natural gas or WTI oil will be bigger in the future. It is going to be fairly bullish for WTI as they expect the economy to continue growing in the next quarter and so on. So they expect 2021 to be really good, at least the last 2 quarters. So this could be quite significant what basically comes out of this meeting, this outlook. Otherwise, there's nothing really happening here in the news. So we can go over to TC2000. I'll get it up here. And then we can basically start. So we can start by looking at the Nasdaq, and as you can see, we have fallen quite a bit. So people that haven't seen my setup before, this is basically what I use when I analyze things. It is limited. For example, it cannot trade, for example, commodities and precious metals. There's silver and gold here, but other metals are not included in this. Stocks, it is only stocks in the U.S. stock exchange, and most of the major currencies around the world, they are also trading on this platform. But it is a really good tool to use because of all the functions that are available here just for technical analysis. So this here is what we're looking at the Nasdaq at this current stage. So main screen here is where I have the price action in daily chart, and then we have the moving averages. I have 7 of them. I have the 50, 150, 200, 20 exponential, 40 exponential, 100 moving average, and the 300 moving average. So at the moment, so this is not the future, so we have rallied from here, and we're basically testing the 100 moving average at this current stage. Whether or not we manage to break through that is going to be significant, because if we manage to take out these highs here, then we'll go higher. If not, we'll probably stay here or go lower. So that's what's going to be significant. We have crossings here of the moving averages, and we also saw the effect of these moving averages when we basically crossed. So up here in the corner, I have the Bollinger Bands, and here we have the MACD, the RSI, CCI, and so also the stochastic. And usually when I make my analysis, I use these technical indicators. But the indicator that we're going to look at today doesn't really resemble any of this. And to be fair honest, it technically doesn't need any of these indicators to basically when you're trading with the other indicator, which is the cloud. And I will most likely refer to the cloud as it's much easier to pronounce it. Most of the names in that indicator are in, I think, in Japanese, so I'll be using the more common words that are used in that indicator. So I will have to go to one analysis, and this is just price action of the Nasdaq. And in order to get the cloud, you just write here Ichimoku cloud. That is basically what I'll just say the cloud. So press here, and when you do that, this arrives. And this is fairly uncommon indicator for most people, especially beginners, to use, even though this is probably the best indicators for beginners. So when they see this, it looks like finger painting on my screen, and it doesn't. It's a lot, and therefore probably because people will just run away from this as soon as they basically see this. But what we're going to do is just talk about what this technically does, what all of these lines are, and if you technically need all of them. And if you press here and then do edit, then you basically get all the lines and all the setup for the cloud. So this indicator is available in basically every simulator there is. But for example, on eToro, it's really bad because you can't get rid of certain lines. For example, the lagging span line, you cannot get rid of that, and in most cases, you technically don't need this line. So we don't have the official names here. We have a conversion in the baseline, lagging span, leading span A, leading span B. So if you just look at what each of them basically resembles, you have it basically in colors here. So the conversion is the red line. And in essence, this is a 9 simple moving average. So that is basically what the red line is. So there's a moving average that you, in order to calculate this, you have 9 days. You take the average of those nine days, and then you have one moving average. And then you just do the same method into the future and so on. Because this is a 9 moving average, it moves really fast. So compared to a 50 moving average, 100, 200 moving average, this one reacts really fast when price action changes. So next one here is the white one. This is what we call the baseline, and this is a 29 moving average. So I haven't checked the maths why they are using 9 and the 29 moving average, but in essence, this is a 29 moving average. It is fairly uncommon to use a 9 and a 29, but in this case, they basically use a 9 and a 20 and a 29 moving average, simple moving average. Then we have the gray area, this gray line here. This is the lagging span, and technically this is similar to a Bollinger Band. And that's the reason why I technically get rid of it. I want to get rid of it because I rather include Bollinger Band into this analysis than use this line here, because I think the Bollinger Band explains more and it's more friendly to basically work with. But it basically explains the distance. If the distance between this line and price action is wide, then basically there's a lot of volatility, and you can also see why. We are dropping really heavily here, and therefore the distance is very far away. Here, for example, the distance is not very far away because it's going gradually up. So every time you have a big drop, you have a big distance. Every time you go gradually like this, you have a small distance. So that is basically what this line basically tells you, is that we have price action that is really dropping really, really fast. So then you have the cloud, and you don't have to know what the cloud is. You just know that have to pay attention where the cloud is. So these are also moving averages, but they don't really have any other significance other than to tell you when you have a bullish market or a bearish market. So what I'm going to do is I'm going to get rid of the lagging span. So it just becomes much cleaner to look at when you get rid of this, and it basically is, in my view, completely worthless. So what you're left with is this. You have the red line, which is a 9 moving average. The white line is the 29 moving average, and then you have the clouds. So there are so many things that you can do with this, and you can also use other indicators. For example, Bollinger Bands, you can put on this as well, and it's really awesome when you do that. And you technically don't need anything else after that. So I'll go through what basically you can use this for. And to be fairly honest, if you're a day trader, this is probably not the indicator that you should use. If you're a swing trader, this is definitely something that you should look at. And for newcomers that start, then swing trading is much easier than day trading, for example. You tend to hold your positions for days, weeks, probably also months at a time, while day trading is you just hold it for one day. So for instance, in a swing trade, you would enter here and you would hold it all the way up here, and then you would sell. In day trading, you would basically you would open a position in the morning and close it before the day is gone. And therefore, every single candlestick is basically open and closing trade. Not the same for swing trading. This will be open here, close up here. Several weeks, could also be several months. So first of all, we'll talk about the cloud. So the cloud basically tells you when price action is bullish or when price action is bearish. That is what the cloud does. So if price action is above the cloud, then you have a bullish market. That's also what we see here. So we can see the cloud is underneath here, and we have a very bullish market here. When the cloud is above, you have a little example of it right here, then you have a bearish market. That's what you basically see right here. So that is what the cloud does. If you should not think about selling if price action is above the cloud. You should only think about buying. And the same goes for the opposite. If the cloud is above, then you should only think about selling, and you should not think about buying. And it's technically as simple as that. It also, because it is probably more useful for swing traders, at least in the daily chart, then they don't have high leverage. So you have a very high span in your stop loss and your take profit, for example, when it comes to swing trading compared to day trading. So you don't get stopped out. So you have more room when this moves up and down and so on. So, but the cloud, that is basically what it does. So, for example, in the middle, you should not trade here. When price action is basically inside the cloud, that's basically where you should not trade. You should not take a position when it comes to selling or buying if price action is basically inside the cloud. So, for example, here, you should basically stay away from the market. The same goes for this period here, or probably this entire period here, just stay away from the market. The same with the technique says, for example, here, just stay away from the market because price action is basically inside of the cloud. So it says whether or not market is bullish, it says where it's bearish, and then it also says stay away from the market. Don't trade if price action is inside of the cloud. So if we could take the period right where we are at the moment, we are very close to being inside of the cloud. We're right at the edge. Today we're rallying, so the question is whether or not we manage to go through the cloud today and so on, because it becomes technically gambling when that occurs. That's what this indicator is saying. Being inside the cloud is technically a zone where it is very illogical to start a trade. So then we can look at, for example, the convergence, which is a 9 moving average, and the white line, which is the 29 moving average. And this is basically the signal. So this is where the signal comes from, whether or not you should enter a market to buy it, or you should enter a market to sell it. So if the red line crosses the white line to the upside, then that is a buying signal. That is what the cloud basically is, this indicator is basically saying. So we can go all the way back to the beginning of the coronavirus is right here. So this is late February in 2020. We had been above the cloud for a really long time, since basically October 2019. We have been above the cloud, and we're basically trending upwards. So you can see right here we have a crossing, the red line above the white line, and ever since then we basically rallied and rallied and rallied. It's not until we get to this area here, it is basically that phase there, where the red line crosses the white line to the downside. And this is basically the beginning of this massive drop to the downside. So really easy. You just need 2 trades here. Not really easy. Easy to say when you say it, look in the background. But by just looking at these line crossing, you have a massive trade to the upside. This is a trade, if you go to the top here, of roughly 25% in the Nasdaq. If you chose to leave the trade, for example, when they crossed, then you have a trade of 20%. So a really, really good trade. And if you wanted to enter the market right here, when you have another crossing to the downside, then you could have started selling all the way down to the bottom. But there is a catch here, because as I said earlier, this indicator tells you not to trade when you're basically inside the cloud. So you should actually have started selling right around this area here when you're basically outside of the cloud. You could also start here, but it's more risky. So if you started here, then you would have a drop of roughly 27% to the downside. So if I were using the cloud, I'm just starting using this, and I basically found it really, really, really helpful just to determine when market changed to a positive trend, to a negative trend, and so on. So this area here, we don't have a crossing. We are rallying, and now we're seeing that the red line is crossing again the white line. So this is a signal to buy, and it has been above all the time, all the way to this point here. So if I were to choose to enter the market right here, this was back in beginning of April last year. It rallied all the way to the top, 1st of September. I remember this because this is the worst trade I've ever made. This is a rally of 57%. It rallied, and then it completely collapsed. And you could have chosen to leave the market here, because you would see it on the Bollinger Band that this is an area you should basically leave the market. Or you could have left the market here when the red line crosses the white line. So if you take this trade, when it crosses and then it crosses again, that is still a trade of 34%. So 35% actually. So absolutely massive trade. So when considering this is a really, really good indicator when it comes to long-term positions, when basically to enter a market and basically to leave a market. So you can also, for example, if you have used other tactics, for example, with stop losses and so on, you could look at this and see that it was about to cross, and then you could put a stop loss right underneath. If it was basically a false crossing, you could basically have a stop loss right here, and then it would end. So if this line were to change all direction, then you would not be stuck in this trade. The same goes for up here. If you wanted to start selling and it all of a sudden changed direction, then you can have a stop loss right above in order to save your trade. So by using also other methods, then technically you can take a little bit more risk because of a stop loss right above. But otherwise, these crossings are technically awesome for this. So if you look at more previous data, this is basically November. This was the election, and you can see that we have a crossing right there to the upside. So this was basically the 11th of November, so a few days after election, and you saw the jump here in the election. So it fell down again, and then we had the crossing, and since then it rallied all the way up towards this point, which is 18.15%. So now we're having another drop, and you can see that right here is where we cross again, and then this basically falls apart. So that's the reason, one of the reasons why I've been just staying away from the Nasdaq is, and also why I basically chose to leave the Nasdaq is basically also because of these crossings and that we are starting to trend underneath the cloud. So it doesn't have to mean that we're going to collapse. We were trading underneath the cloud right here. We were also trending underneath the, this was basically a collapse, but here we did trade underneath the cloud, but then turned around significantly. So it could also be that we would, this is basically the bottom, and then we're going back to the top. So if that were the case, then we will see this red line turn around here, and we will cross the white line, and that will basically be the indication that we can enter the market again. At that point, this price action here will be inside the cloud. So it's probably a good idea to wait a little bit until it goes past the cloud, and that will basically show that we will see something similar to this, where we have a massive drop underneath the cloud, we have a rally, and then we have price action and these two moving averages crossing, and then we have the rally. So yes, that is basically what. But other than that, when you're using this indicator, buying when under a cloud is not considered a good idea. It's considered complete gambling. The same goes for selling when you're above the cloud. That is also not a good idea because the cloud shows you if it's underneath the price action, then you are in an uptrend, and you should never ever sell an uptrend. The same goes if it's above, then you are in a downtrend, and you should never ever buy a downtrend. It's like catching a falling knife. Yes, that is basically the cloud. So at this, if you look at the Nasdaq, at this point, Nasdaq is for day traders really good, swing traders not so good. You could have entered it here for a sell and just hold it. But we'll see whether or not this drops significantly further. This was a massive drop that lasted around 3-4 weeks, give or take. I don't really expect this to last this long. If it does, then we'll probably go really, really low with this. We can actually look at that. You can see the long Fibonacci retracements for this. We are right at the first one, tested that. Otherwise, the next one is right down here at 11,100. Then we have the 50 here at 10,300, and then we have, as far as this will probably go, 9,500. If we were to completely fall apart here, but there's not a yeah. Can we take questions afterwards? Yes. Yes, I think that will. If you have questions, you can basically write it. For the people that just joined, you can write it in the chat. Or you can also write it in for example, on Patreon. That's also possible. Yes, okay. Yes. So we can go and look, for example, at another instrument that is basically that is gold. So we have gold right here. So we can look at the cloud as well for gold and basically see how that is basically looking at this point. So the thing is, when price action is inside of the cloud, there is very little clarity. It just becomes mishmash. It is not showing a significant trend at any point. It is really good when you have really good trends like this. Then you have a clear sign that this is going to increase. And same goes for here. And if we also go further outside, for example, here is also a nice trend. And also back here, that is also a really nice trend to the upside. But when price action is basically inside the cloud, you can just get all of these moving averages. Everything is just mishmashing all around the place and it's not saying anything at all. If you look at the period where we have right now, then we can see that we crossed right around here. So that's basically where we crossed the 29 moving average, and since then we have basically broken down. You can see that the cloud is above, and we are clearly in a downtrend here. And we will be in a downtrend until this red line crosses the white line to the upside. So if this red line here turns around and crosses the white line, then you will see price action continue going through the cloud and going to the upside. And you will have a reversal, something looking similar to this, where these two lines of the cloud will converge, and you will see the cloud going underneath instead of being above. So gold is clearly in a downtrend. Even though we are rallying significantly today, this is still a major downtrend for gold. So for swing traders, this is awesome. For day traders, not much. If you go, for example, to a 4-hour chart or something like that, then yes, then it will become more helpful. So for example, if you look at the 4-hour chart, so also here you can see in the 4-hour chart we are still underneath the cloud. We are still these moving averages. They have not changed, even though gold is significantly rallying today. The red line is still underneath the white line. If it were to turn around here, then you would see this rally significantly more. So we have an example right here. So we have a crossing, rally, rally, and then you have a crossing again, and then it just falls off a cliff. So clearly in a downtrend, but especially here, it is in a downtrend. So if you look at, and probably look at a currency, for example, Great British Pound, US dollar, you can see that this is the 4-hour charting into the daily first. So in the daily, we are witnessing, first of all, we take where it is basically crossing. So crossing is right there. So red line crosses the white line. And since then, this crossing here, basically crossing there, right there, all the way to the top here, this has been really, really bullish. So an increase of 8.77%. So if you paid attention to the crossing here, took a trade and held it all the way from November to the end of February, you would have done an enormous trade for this currency pair. So since then we have broken down, and now we are again crossing. So this is the first crossing that we've seen. We had a small one right there, and then it crossed yet again. But it is turning around yet again. If this continues down towards the cloud, then you could see something that is a trend reversal, something similar to this. This is basically a breakdown of this currency pair. Yes. So one really, really cool thing that you can do with this is to add a Bollinger Band. So this is the Nasdaq again. So you can go to plots here, and you can add Bollinger Bands and add that to this, and then it will look something similar to that. So here we have the top of the Bollinger Band, the middle of the Bollinger Band, and by combining the cloud and the Bollinger Band, you can get some really, really cool analysis from this. Because the Bollinger Band basically says to you when this is overbought and oversold. It's basically overstretched and oversold. So if you're outside of the Bollinger Band, then you should expect this to pull back. So if you use the cloud, you can get the long trend, and then you can also get these dips. For example, all of these dips that are occurring due to the fact that price action in the Nasdaq is basically getting overstretched. So for example, our uptrend started right here. So we rally from this point all the way up there, get outside of the Bollinger Band, and then it drops. So it is possible to start selling this if you're taking on massive risk. I don't really sell indices whatsoever. I just try to buy them when they basically dip as much as possible. But in essence, you could start selling it here and then buying it again until you get outside and then sell it again and so on. So you could get the uptrend long term, and you could also get, for example, when price action is dropping due to being overextended in this uptrend. So yes, if you're looking, for example, at the Nasdaq right now, it is not strange that we are seeing a rally. You can of course look at the macroeconomic factors and so on, but from a technical standpoint, this is probably due to the fact that we are really overstretched. We have been dropping like a rock. We have been outside of the Bollinger Band for some time now, significantly, and when that happens, you need a pullback towards the middle of the Bollinger Band or up towards resistance, usually at the highs here, before you continue lower, if you are going lower. So at this point, we are underneath the cloud, so it should be basically saying to us that we are going lower. But we'll see what happens. We need to take out these highs before it goes significantly higher. Yes. Does anybody have any questions? Okay, yes, and I think we'll go to the next session, and that is basically to the scan. So we have eScan here, and we will go and look at the Bollinger Band, and it will, because we are basically in a massive downtrend, it's probably a good idea to look at what companies are basically overextended at this point. And my idea here is to check the good companies. So the ones that are very valuable, that have dropped, and you know that they are going to increase in time. So first on my list here is Tesla. So if you look at Tesla, we can see that it has been doing absolutely dreadful for the last few days. So we have found support right there. That is 150 moving average at 563. Technical indicators are very, very negative. Also here in the Bollinger Band, we're not significantly outside, but we are outside. So Tesla is, I can say, it hasn't dropped this far since basically back in April last year, or February, March last year. It didn't drop, then it dropped all the way down to the 300 moving average, but now we're at the 150. So that is a significant drop, but also this has rallied from the very lows here to the highs of, give or take, 10x, nearly 11x in less than a year. So that we have a pullback around 1/3 of the value of Tesla. That's, even though that's is an enormous number, considering how much it has rallied since this crash, is not a major pullback, to be honest. But we should see a rally from here that is to be expected. So if you look, for example, in the cloud, you can see that Tesla is underneath the cloud. So we had a crossing right there. So we could have entered a sell in Tesla right here. And this would be, until now, would be a trade of roughly 31.6%. So very good trade. We could also, if for example the upside, we can see it right there. That is where the cloud basically, where the 2 moving averages cross. And this would have been to the highs, a trade of roughly 112%. Or if you go over to where they cross again and then choose to sell it here, that's a trade of 96%. So, of course, if you decide to take it right here, sell it, then you would earn more. But that is a risk. It's basically guessing. You could also have thought that this was the highs, and that you will see a crossing here and then sell it here. So probably safest thing is to buy it at the crossing and sell it at the crossing, because then you technically know where this is going. But Tesla, it is possible for this to go further. If you look at, for example, the cloud, where this could go, then it basically says price action is underneath the cloud, and therefore you should only sell this. It's not a buying possible to buy yet until basically these 2 moving averages cross again, similar to what happened over here, and then you will see this rally. At the moment, we are seeing a decline in price action for Tesla stock, and it could go significantly further. If you take the long for the Tesla stock, you can see that we tested the 38 right here. The 50 is down right here. And this is probably where I think this will go, where it turns around. It is the previous highs over here in September. And you also have the 50% Fibonacci retracement. If this breaks, then the 60 is right underneath here. That's 389. Don't really see it go that far, but who knows? It has fallen significantly since this started, and it could actually fall significantly lower than this. So yes, so Tesla is definitely a company that it will be with us for the foreseeable future. A massive company that is pulling back now, and this is just value hunting. This is what Warren Buffett basically says, that you're supposed to be greedy when other people are fearful, because what we're seeing here is a sell-off. And people are selling, and they're trying to take profit and so on, and this is just dropping even further. And that's basically when you should take advantage, could take advantage, because now it's becoming cheap compared to where it technically was right up here. But still, Tesla, to be honest, is not cheap. Its PE ratio is ridiculously high still. So we can look at another that is overstretched. That is, sorry, it was right here. That's EA. So this one is also our RSI at 20. We are in a Bollinger Band of underneath the Bollinger Band, and we are just above the 300 moving average. So last time we got to the 300 moving average was over here in November. It basically passed the 300 moving average, and then it rallied significantly to the upside. So the 300 has been a major support, and it should be expected that it should be major support yet again. So we did cross significantly below the 300 right here, but so did everything. But here it tested the 300 and it rallied after that. So this is certainly a stock that looks to be very interesting too as well. If you look at the cloud, we are still underneath, barely underneath, and same thing. If you're underneath the cloud, you don't sell, you don't buy, you sell. So it crossed right there, and since then it basically dropped roughly 11.2%. So you shouldn't basically enter this when you use this indicator until the red line crosses that white line, and then price action will continue to go up. So very similar to why you have a crossing right here. If you enter the trade right there, then you will have a trade that is roughly, give or take, 24% to the upside. That's where we are. You could also enter it here and closed it when we crossed again, and that's 18.9% to the upside. So cloud, absolutely awesome for long-term trading. You can see right here, this is a crossing here, and it doesn't cross again until we are right there. And that is a trade of roughly 40%. So this is really good indicator. So let's look at the next one that is here. This is SWKS. Yeah. So we assume also we're way outside of the Bollinger Band here. We're testing the 100 moving average. We're not oversold yet. So, and technical indicators are still fairly bearish. So last time this fell this far was basically back here in November, in December, where we fell towards the purple line here, which is the 150 moving average. So this could drop further. 100 moving average has not been that supportive. It has been basically been 150. So yes, next one here is AMD. So yes, this is a favorite for many traders right at this point. So yes, what we're looking at. First of all, Bollinger Band outside. RSI significantly oversold. Stochastic, MACD, CCI all very bearish. And we are most likely going to test the 300 moving average. We haven't tested it way back over here. This is back in 2019 where we basically tested the 300 moving average. So we're way below the 200. So we could drop towards the 300, and this will most likely be as far as this goes. So if we look at, for example, the cloud for this, you can see that we should have entered the trade around there. This is where it crosses and it continues to drop, and this is a trade of 18%. To the upside, we can see that it's basically all over the place. There was a good trade right here to hold it to the upside. That's roughly 77%, significant rally. But at the current stage, sorry, we are underneath the cloud, and this is basically in a downtrend at this current stage. That is what the cloud basically says. And in a downtrend, you don't buy, you sell, and you don't start buying again until this red line crosses the white line. So yes, we can go and shortly look at the big tech stocks. So we don't have that much time left, but the big tech stocks are right here, and all of them are really interesting. So we have we have Apple that is trading at 116. This is probably as far as Apple will go. The 200 moving average will most likely offer significant support. All the way back here, we went to the 300, but 200, that should be a very interesting area to enter this trade. So Amazon, we have also fallen, but it's not as interesting as, for example, Apple is. Microsoft, also not that interesting. Facebook, nah. Tesla, we have covered. Google, we fell quite significantly yesterday, but also not a major trade. But Netflix has dropped significantly underneath the 200 moving average. We haven't done that since basically all the way here back in March 2020. So at this point, we will most likely rally from here because we're so outside of the Bollinger Band, significantly low in the RSI, and technical indicators are very low at this point. So we most likely will see a rally from here and head towards the upside. So yes, has anybody any questions? any stocks or anything that I want you to look at. Okay. Yes. Next time, if nobody have any questions, next time we are going to basically take the cloud yet again, and then we're going to add other indicators basically to the cloud. So using support and resistant strategies and using the cloud. That is basically what I'm going to do the next time, and to basically see where you could use the cloud with other strategies in order to determine when to enter a trade and when to leave a trade and so on. Yes, so if nobody questions, I'll say thank you and good luck.